Okay, let's see if audio is working and we'll get started. Yep, looks like we're good. Good morning, everybody. Happy hump day. Today is Wednesday the 15th. We just had the producer price index coming in and everything in the stock market is currently broken because the producer price index actually came in lower than expected at 4.4% versus 5.2% expected. So huge difference here, obviously, for the year over year. And then the month over month, there was zero inflation for producers versus 0.4% expected. And this is down from 0.1% last month. And the year over year reading is down from 5% last month. So everybody was expecting the producer price index to be moderately lower, but it ended up being significantly lower. And the dollar is actually going up, interesting enough. Usually whenever inflation goes up, that's when you see the dollar going up because rates have to go up to curb inflation, which makes the dollar more sparse. The value of the dollar goes up. But we saw the dollar rocket from 103.44 to currently 104.82. Gold is also up with the dollar, which usually has an inverse correlation with one another. Usually whenever the dollar goes up, gold goes down, but they're both up this morning. And then finally, the big news of today that you came here for the title was that there is now a 50% chance that we're going to get a Fed pause for the March meeting. There's actually a 66% chance now of a Fed pause. Now, I think that odds of the pause are zero. I think that the Fed still needs to get inflation down, with it being at 6% for the consumer price index yesterday, but the markets, the Fed futures are telling them that they need to pause. So we'll see if this twisting of the arm that the Fed futures are doing will convince them or not. I think not, but the Fed hasn't gone against the Fed futures in like 80 years. So we'll have to see who wins out this one. Not a chance for a pause. I agree, but they've always followed it for 80 years. This would be the one time that they would go against it. So we'll see. I think if they do end up pausing and giving that dovish sentiment, I think that could re-escalate inflation, though. And that would probably send inflation back above 8%, possibly all the way to 10%. I don't think that's a good move to make. So we'll watch what goes on. But yesterday I took on a call credit spread for KRE, the regional bank ETF. That one ought to be doing pretty well this morning since this one is down by 5% today. Probably going to end up taking profits for that, most likely. And then I have the FedEx call debit spread. That one might actually be at risk of losing. Currently it's trading at 197.89, so it's still above my 197.50 strike price. And their earnings is tomorrow after hours. So I could either hold this as a hedge against my bearish positions that I've got open right now, because I do have quite a bit of bearish. With KRE, the call credit spread is bearish. The put debit spreads that I have for SPY at 385 and 380 are both bearish. And then I have the gold call, which is actually kind of goes both ways. Like I talked about yesterday, the relationship with gold and the S&P during 2007 to 2011. There's a much greater rise in gold than what we saw for the S&P basically traded flat. So that is your morning recap for you. Good morning, Irfan. Good morning, Kamala. Good morning, Gatsby. Good morning, LK. Hopefully y'all are having a great morning so far. The VIX is currently up by 17%, currently trading at $27.80. And if we go to UVIXI, this one's up a good bit, 12%. It's actually up a lot less than what it should be with the 1.5 times leverage. That ought to be up by like 25%, but sometimes it takes a while for that rebalancing to happen. I guess especially in the morning when market open. Good morning, Kelvy. My thoughts, though, is I'm probably going to get out of this gold call. I want to get out before the Fed meeting because I do think that the Fed is going to go with a 25 or 50 basis point rate hike, whereas the markets expect them to pause. That's going to send the dollar up even further, and that would act against gold. So, personally, I want to get out of this trade. And I could either do this. Actually, I can't deal with a cover call, poor man's cover call. I tried it before and I couldn't set a wide enough strike price for it to make sense. So I think I'm just going to take the profits here of $200, $210, and be done with it. So the bid is $31.20. The ask is $35.50. So the mid price is about $33.35. So I'll try to get out. I bought them at $31.25. So if I can get out at, say, $33.25, I think I'd be happy. But with that wide bid-ask spread, since the leaps option, it does make it a little less likely. But I actually did end up getting filled, so I will take my $200 profit and run with it. And that frees up $3,000 of capital, which is real nice. I love saving cash. Cash is my favorite thing to have right now. All right. Closing options alerts. Premium members just took profits on the gold leaps. Call expiring, what was it, January 2025? No, actually December of 2024. And the strike price I chose was 160. Close at 33.25. So 200 profit. Let's see. Gold leaps. Hopefully I can find my open. 31.25. There we go. All right. Sweet. Good stuff there. Nice little 200 profit. The KRE call credit spread ought to be profiting pretty well right now too. Yeah, these are up by $180. I opened them for $32. Now they're going for 4 cents at the mid price, but the bid ask is 54 and 58 cents. So the liquidity for this is trash. Let's see. We'll go check Aries, see if they can give me a decent bid-ask spread, because that's kind of nutty that the bid is negative 50 cents. That makes no sense, but let's check. KRE is the ticker symbol. Options chain. I think I set it for next week just to give myself more time for this trade to work out, but didn't need it. March 24th expiration, and I assume that it would be below $50 by selling the 50 call, buying the 51. These are going for 18 cents and negative 29 cents, so I'd have to get out at that 18. Well, yeah, the liquidity on it is just not enough in order to get out, I think. Because now it's showing me negative 17 cents, which doesn't make any sense. Let's see. Do I know anything about Nubank, which Warren Buffett invested $500 million? No, I haven't heard of that one. Think I should hold my UVXY calls or start closing them? I would want to buy UVXY ahead of the Fed meeting personally, which is, 7 days away. But, that's just my opinion. I can't say whether that's a good idea or not. because I make stupid decisions sometimes too by buying UVXY when it was trading at like $7 or $8, and now I'm still in the red here. So take that for what it's worth. I think I want to buy more shares of it though. I wanted to buy it yesterday whenever it was trading in the high fives and the low fives, but missed that opportunity. So I think I'm just going to keep on holding. I think that the VIX, if the Fed does decide to go with even the 25 basis points at this point, and if they decide to hold their previous guidance of going to 5.5% for the federal funds rate, I think that would be the real rocket ship. I don't know what else to call it for UVXY and the VIX. This is something that I tweeted yesterday. Let's see, the bid ask are actually normalizing 11 cents and 5 cents, so I might be able to get out here. But something I tweeted yesterday. I need to update this to be reflective of the new pricing, but that's okay. 25.50 or no hike, all eyes will be on the dot plot after the sudden drop of the Fed futures, estimating 5.5% funds rate to now 4.5% at the end of the year. If the Fed signals no rate cuts and instead raises or maintains their previous guidance of 5.25 to 5.5%, the markets will be in for a rude awakening. I don't think that the Fed really gives a shit about regional banks. If it was, your corporate banks like JP Morgan, Citibank, and, all those higher up banks, then yeah, I think that would have some pull and they would want to prevent that because basically they're in bed with each other, right? But I don't think that the Fed really cares about regional banks failing. So I don't think that they're going to reduce the federal funds rate estimates for the end of the year. And the FOMC watch tool is saying the opposite. They're expecting rate cuts by the end of the year. If you look at the December reading, let's see. Now it's expecting 3.50 to 3.75% by the end of the year. So they're expecting them to start cutting rates already. Let's see. At the May meeting, this is expected to be at 4.5. June. So they're expecting them to start cutting rates as soon as June, which I think is a bunch of baloney. So we'll watch. Good morning, Mike Trills. Miss your morning thoughts. What do you think of the current macro environment? I think that everything is broken. The PPI came in much lower than expected, which ended up increasing the odds of the Fed pausing at 50% now. We saw a rise in the dollar, which is counterintuitive. The dollar index is almost at 105 again, but it was trading at the lows from the past month, so maybe just based on price action, it was due for a bounce. And then gold is going up while the dollar is going up, which also has an inverse correlation. It should go the other way around, but yeah, everything is broken right now, and everybody's expecting a 50 basis points and then going to 3.5% funds rate by the end of the year, which is insane. If they say they're going to pause rates at the end, it will be bullish for the market. I don't think so. I don't think that a Fed pause or a Fed pivot is bullish in this case of banks failing. If there's fears of bank runs, that's not great. It's basically like Lehman's back in 2007, 2008, which definitely wasn't bullish. Although, after the Lehman's crash back in the '08 crisis, the S&P 500 did rally about 15% after that, before, the blowout of 2008. So, something important to keep in mind, that you can still see these bear market rallies, even if we do get major banks failing. Next president is going to be bullish. Hopefully we get a good one. I'm pretty doubtful on that, but good old American politics. Hopefully we get a decent Republican candidate and not the ones that are running right now. It doesn't seem like too great. Too conservative for my taste. With Trump and after the shit that went down with him denying the election, and then DeSantis, I think he's a little bit too conservative socially. So neither of them are getting my vote. The only person that has my vote for the Republican side right now, I think, would be younger candidate. His name is Vivek, I think. Although he's a bit edgy too. He's like anti-woke. Is basically his entire agenda, which is annoying as hell. But he tries to put America first, so that is what I'm all about. All right, let's check out the KRE trade. I'm going to try to get out at 10 or 12. See if I can do that. I opened at 32. I'm going to try to close at 12, which would be 5 times 20, $100 of profit. Over a day, that's not too bad. Let's see. If I try to close them at 5 of them at 12, let's see if I get filled. I'm doubtful that I'll get filled just because liquidity seems really dry here. Yeah. Nothing here for me. Well, that sucks. Nothing here for me. SPY is back above the mother of all trend line, so it's probably just going to bounce around that. Coming back up to 387.4. Down from this morning. That was really steep. Starting at 4 a.m. I think there was something over in Europe that's going on that might have caused all of this rather than the Fed and zero pausing in the PPI. Let's see. Not seeing anything here. European bank crises. So now the European Central Bank is, let's see. European Central Bank was wanting to raise rates, and now they might not be able to with the collapse of Silicon Valley Bank. I still think that inflation is much more important than regional banks. If people want, they can just take their money out of the regionals, and as shitty as it is, and deposit it into the bigger banks that have more cushion. I think that SVB was just a matter of mismanagement and not hedging their positions, and taking that $2 billion loss was on them. The baby doesn't sound too pumped about the meeting. Yeah, not at all. Fears of Credit Suisse going under is why the market is down. Well, Credit Suisse has been under pressure for like 2 years, ever since the Archegos mess. So, let's see. Brandon is great. Regional banks are failing, so overall sentiment as big banks are exempted. I don't think that we should be worried about the larger banks. I think that they still have plenty of reserves. They know how to, manage yield risk better than SVB did. Could I explain the 2-year, 10-year yield correlations? Yes. Let me go check on that. I haven't checked that this morning. But 2-10 yield, I usually go to CNBC because they're the most up to date. And this is currently at negative 0.43. Yesterday or the day before, this was at negative 0.52. So what happens here is that the 2-year was paying more than the 10-year yield. So the rate that the 2-year was paying was higher by 100 basis points. So basically 1% higher that you were getting from the 2-year than the 10-year. So the 10-year at one point was paying 4%, where the 2-year was paying 5%, right? Now, the 10-year is paying 3.45, and there's a 45-cent spread between them. So now the 2-year is paying 3.9%. So the yield for the 2-year is coming down because people are actually buying into 2-year bonds in order to get that 4% yield as protection, right? So people are loading in on the short end of the yield curve, the 3-month, the 6-month, the 1-year, the 2-year, for short-term protection over the next couple of years. So whenever people start buying into those short-term bonds, the rates start to come down because now the pool of people that have to get paid out by these bonds is growing larger, and there's only so much money in them, so they're getting a smaller percentage. But the people that locked in at 5%, they're still in at 5%. But now people are still buying it whenever the 2-year is paying 3.9. So people are anticipating that there's going to be a pretty rough patch for the next couple of years. So in order to hedge that, they're buying into the 2-year bond. So now you're seeing a flattening of the yield curve from the 2 and 10. And whenever you see that flattening, and whenever you see, first you need to see the inversion where the 2-year pays more, which we already saw at 100 basis points more. And then you have the flattening of the yield curve, and that's when the recession generally starts. If you look at the tool on Thinkorswim, it's under Analyze. Every time that the yield curve starts to steepen or go back up, that's when you get the recession. All these gray lines here, or vertical columns, that's when the recession hits, right? So whenever the yield curve was going up here, we were in the recession actually. This one, the yield curve started to go up before the recession. This one. So generally, whenever you start to see the steepening of the yield curve, whenever this starts to go back up, that's when the recession kicks in. So that's what the main worry is, especially with the 210 curve being negative 41 versus negative 100 just a week ago. But I do think that there is a lot of bond market volatility right now that could be possibly misconstruing this and telling us a false narrative. I think that rates are probably still going to keep going up, but with the SVB crisis and everything, everybody is just kind of panicking, and now they're buying into those short end bonds. Yeah, no problem, LK. Well, it's a good gift idea for a newborn. My friend is having a baby soon. Diapers. Diapers, because they go through a lot of them. My parents got me, not a lifetime supply, but they got me a monthly subscription to diapers, which was probably the best gift that I could have got. But let's see. The VIX is pulling back, currently trading at 26.50. It was at 28. So this is definitely pulling back. TLT is rocketing up, so people are buying into bonds as a flood to safety. Dollar index is still up there, but is pulling back from 105. Gold is at 179. I ended up getting out of my leaps for gold. I've studied this for 2 years. 3 years now. Let's see. Dow Jones, IWM. So the IWM is down the worst. Currently negative 2% at 173. So usually IWM is the leader whenever it comes to either recovering or going down. And with the IWM down 2% versus SPY down 1.2%, I think there could be more downside to come because IWM is basically the risk on, risk off indicator. This is a Russell 2000 small cap. So whenever small caps are going down, that means that people are taking their money out of risk assets because usually small caps are one of the riskiest assets to own because they don't have access to a lot of capital. They can't sell their shares because they're not really worth that much. So whenever IWM goes down, usually QQQ, SPY will follow along. QQQ is only down 0.8%, so that's interesting. Currently trading at 295. Kind of want to take on a call credit spread, but I already do have a ton of bearish positions open. TLT is the 20-year. TLT is a 20-year Treasury bond ETF. So whenever this is going up, the 20-year Treasury yield is going down. Yeah, 20-year. Correcto. All right. Yeah, but that 210 spread is insane. Negative 0.39 now. It is dropping like a stone. UVIXI might not be a bad position to open now that the VIX is pulling back ahead of the March 22nd meeting. I wouldn't be too opposed to buy it at 640. Thinking about just buying, like I did before, $100 a day ahead of the Fed meeting. Let's see. I really wish that I could just buy regular VIX calls, but Robinhood does not have that available. But I shall buy $100, 15 shares of it. 16 shares almost. Market order got me filled at 646, currently at 645. And I'll just keep buying every day until the Fed meeting on the 22nd. Because I don't think that the Fed is going to pause. But it's possible. Buy alerts, premium members, just bought 100 of UVIXI. So now I have got, I think, back to 400 shares of UVIXI if I know correctly. 645. 396 shares actually. And if you're going to buy UVIXI, don't hold it for more than like 3 weeks at a time. Because if you do, you're going to have that time decay and it's going to eat all your money away like it did for me. $396 share, 397 shares at 716. Do I do any strangles or iron condors? I wouldn't want to do that in this market just because volatility is so high. You're going to be paying a very high premium. You could always take the short side of it, but you do risk, the stock market going against you in either direction with the higher volatility. Although yesterday I did have an iron condor open, assuming SPY would be 380 to 390 today. That actually ended up coming true. It currently trading at 386, so I could have held that for another day. If you do iron condors, I would probably open them at separate times. So the put credit spread and the call credit spread, I would open them at separate times. Against the price action, obviously. I opened the put credit spread whenever SPY was trading at 383, and then I opened the call credit spread when it was trading at 389. So I maximized my profit by giving a little time between each one, and that ended up making me, I want to say, like $80 in profit or something like that. It wasn't a lot, but you know, it all adds up in the end. I'm going to have to update my spreadsheet. I haven't done that in a minute. It's been busy. But SPY is currently trading at 385.64. Let me check in on the put debit spreads that I have. Is volatility good for buyers right now? Yes. If the stock market moves more than expected. So the way that I see volatility is if the VIX is above 25, I would rather be in debit spreads than credit spreads. Credit spreads are more likely to take your max loss if the stock goes against the direction you chose. Whereas with the debit spread, you're going to pay less money for it. You're going to take on less risk reward if it's out of the money. So I would rather take on this lower risk, higher reward trades. Like I've been doing for these put debit spreads. I've been loading the boat on put debit spreads. I've got this 381, 380 put debit spread expiring in April 21st. I spent like $350 on this. I don't usually spend more than like $300 too, right? I keep my positions small. With a $30,000 account, that's like 1%. And then I only use like $7,000 for options, and basically all of my money is in cash, right? $22,000 in cash. So basically I keep my position small, and then I go with debit spreads, and I extend my expiration date usually at least 2 weeks out, but it really depends on what I'm trading around. Like for this March 31st expiration date, the reason why I was trading this is because of the Fed meeting, which is the 24th. Or, sorry, the 22nd. So I gave myself an extra week. I didn't probably need that extra week. I think that it's probably going to be pretty rough day for the market on the 22nd, to where it would be below my 385 strike price. But, you know, if SPY does manage its way up over the next week between now and the Fed meeting for whatever reason, then I have more time after the expiration on the 31st in order to make up for that. So currently my assumption is that it's going to be under 385. I only paid like 35 cents for these. So for these debit spreads, I'm usually not paying more than 35 or 40 cents a piece for a $1 spread. So this means that I can make $65 for every $35 that I spend. So I'm gaining that, you know, basically 2 times leverage if the trade ends up being correct. Usually I end up closing out of these well before their expiration date too. So, you know, I'm not saying that hold until expiration and try to get max profit or max loss, but yeah. I would rather be in debit spreads, and the way that I see them is going longer in your expiration. Short KRE, I've already been short in KRE. Let's see. I opened 5 call credit spreads, assuming it's going to be below 50. I wouldn't double down on the position, I would say. Well, if the position even loads, damn. Currently trading at 43.50. I'm assuming it's going to be below 50. Right now I'm up 75. And my max profit is 150-ish, right? 160. So I still have a long way to make max profit. So I'm going to keep holding this just because I think that there's a much less chance than what the markets are anticipating. Currently 17% chance is what they're telling me at the 17. At least trading at 17 cents versus the $1 spread. I think there's like a 10% chance that this trade ends up going against me and KRE goes above 51. But still have a ways to realize that extra $5 of profit per trade. But yeah, I'm already short there. Short on SPY with the 385 put debit spread and the 380 put debit spread. And then UVXY shares piled on top of that. So probably ought to leverage into some bullish positions. But what is KRE? KRE is a regional bank ETF. Is there a QQQ proxy we can buy puts on? Don't want to risk 800 for QQQ. Not that I know of, really. You could do, well, QQQX, but QQQX usually doesn't lose as much as QQQ does. You know, this one's only down 0.8%. QQQ is down negative 1%. So this one's kind of a decent hedge on QQQ and the downside because they collect that extra income of 8% a year. But a proxy for QQQ, I don't think that there's any smaller ETFs that you could buy. At least any that have a decent amount of liquidity. I wonder what Tesla's up to today. That could be your proxy. And Tesla trades more than QQQ ever does with the high beta, high volatility that comes with it. Yeah, you could do TQQQ. That's a good one. It's a triple leverage bearish ETF. And SQQQ is the bearish triple leverage ETF. TQQQ is the regular. So you could trade those. I don't like trading options on triple leverage ETFs just because they're already leveraged themselves, and then you're stacking leverage on leverage, and things can go really south really quickly with that. But, you know, there's people that trade that and they're successful with it. So if you want to try it out, it's going to be a lot cheaper than trading options for regular QQQ. Because, I mean, these only trade for, what, $40 or so? Actually, only $22 for TQQQ. So you can buy puts on this. And you're only spending $100 for a 2-day expiration. If you go, say, 30 days out, you're paying $200. So these are a lot cheaper than what you'll find with regular QQ, but that's also because it's a cheaper stock. So, but yeah. And then SQQQ is the triple leverage. So you could just buy SQQQ shares and make profit with that. That would basically be the equivalent of buying like UVXY, I would say. Not exactly, but similar. Similar trade idea, at least. Credit Suisse shares plunge as the bank storm spreads to Europe. Oof. I heard Bitcoin was doing pretty good this morning. Let's see, BTC currently trading at 24.9, so it's just kind of hovering around that 25,000 mark. It's been trading kind of similar to gold, just with that higher beta that comes with the risk assets. Check out Riot. Sure. Riot, I mean, if crypto does well, then Riot ought to be doing well as well. Currently down by 1%, so you do have the drag from the tech market that will kind of weigh it down, since it is, you know, down 1% today. But if crypto mining goes up because people are trying to get in before the halving, and, you know, crypto is going up, then Riot would go up with that, just because there's more demand for their service, right? So Riot could be a decent opportunity. But that's on the assumption that crypto keeps going up, which again, it's a risk asset. And if interest rates are going up, that could weigh negatively on it. So something to be aware of. But the way that I see crypto is it is a hedge against the traditional finance system, which seems to be caving in right now. And I mean, where else are you going to put your money? You're going to put it either in gold, metals, but you can't really trade with metals because they're heavy, too hard to transport. It's the reason why we got off the gold standard back in the 1970s. And, you know, crypto is a nice alternative to that. And it's also global. The only problem with crypto, I feel like, though, is that it's so damn expensive for the transfers and actually trading it. Like, the other day, I was giving $100 of Ethereum to somebody, and then they had to pay like $30 or something like that for the conversion from USDC to Ethereum. So I think that they really need to work on the fees coming down. But yeah, am I missing S something? SQQ, and the market fell last time. It went up 32. $100 trade would turn me 600 to 700. Let's see. Well, the problem with QQQ right now, the reason why it's not going down as much as the other indexes is because of the lowering interest rates. So whenever interest rates go down, that's favorable for tech companies because a lot of them need to borrow money in order to grow their business. So whenever interest rates are going down, that means that debt is becoming cheaper for them to continue to borrow to grow their business. So that's why you're seeing an outperformance for QQQ versus SPY or the IWM. Although, you know, with the high risk environment that we're coming into with the banks failing recently, it's could be pretty negative for tech stocks because of their extremely high valuations, right? If you look at, like, for example, what's it called? NVIDIA. This is trading at the same price that it was a year ago when they were doing like 30% more on their earnings per share. So that means that their price to earnings ratio is 30% higher than it was a year ago, and now their earnings is starting to decline because we're going into a recession, which is inevitable. Whenever people have less money to spend throughout the economy, you're going to get an earnings recession. So I think that NVIDIA almost seems like an obvious short. Maybe ahead of the Fed meeting on the 22nd, but I feel like I already have a lot of Fed meeting trades on, so probably not going to take that right now. I really wish that I could take on short shares of the stock instead of doing options for it. That way they don't expire. But don't have that option with Robinhood. You do have it with Aries, so maybe I can make the switch over to Aries finally. How do I foresee the market today and tomorrow? Today, I mean, it's already down by 1.3%. I can't imagine it really falling maybe more than, let's see. It could retest the lows at like 383, but I'm kind of doubtful for it. Right now, the RSI is above 50, so it does seem bullish at the moment, but I would say it's either going to be bullish or neutral. Probably just going to hover around this 386 mark for a while. And we could see maybe a breakout because I know that the maximum pain point is 399, which is a lot higher than where we're trading right now. So since it's so much higher, the likelihood of getting to max pain would be a lot lower. But let me see let's see if we have an update for the maximum pain. right, we're trading at 387 right now, and the maximum pain point for the 15th is 391, so we could push a little bit higher from where we're trading right now. And then for the 17th, which is this Friday's expiration, the monthly expiration for March, it's still 399. So, we could see a push up just because of that maximum pain point and the market makers trying to wipe out all that options value. But, with this chance of the Fed pausing, pivoting, that's kind of negative. With the reason being that regional banks are failing, right? If it was for, actually inflation coming down, if the Fed actually did bring inflation down to 2% and now they're pausing, then that would be bullish for the market. But if they're pausing because of regional banks failing and the fear of contagion, that is bearish. So that's why you're seeing the markets coming down, even with interest rates coming down and the odds of the Fed pausing at 50%. The VIX is at 26.75, so not really moving much today. But yeah, I think I'm just going to keep on piling into the VIX $100 a day like I was before. And then probably exit that after the Fed meeting on the 22nd. How do we short sell? Selling an option, but I thought we can do it with 100 shares of the stock. Need to understand that. Yeah, you can't sell an option without either having enough cash to buy 100 shares or having the 100 shares itself if you're selling a call. So you can short a stock depending on the brokerage that you're using, though. With Aries, I know that you can short sell. I'll take y'all to how to do it there. Still have my 90-day restriction, so I can't actually make the trade, but if I wanted to, I could go to NVIDIA, trade, sell short, and then however many shares that I wanted to short. So if I wanted to use up all my buying power, it would be 4 shares at 240 or whatever it is right now. Review the trade and then submit. But obviously can't do that if I have a 90-day restriction, which actually isn't our 90-day restriction. It's because my account isn't over the $2,000 mark for level 3 options. So make some deposits in the next weeks, bring that back up, and maybe I can trade with that. Would I ever short sell instead of buying a put? Yes. If you don't really have a timeline for when the stock is going to go down, then I think that shorting is a viable position. But you also have to keep in mind short positions have infinite risk, for one. If you have like a short squeeze, you could get squeezed out of the position and get margin called. But I did end up taking a short position a while ago against Zillow, and this one I kind of want to take again just because it's trading at a ridiculous valuation at $40, which is up from $26 at the lowest point. I shorted it around $32 or something like that, and I got out of that position at like 30, so I took like a 5% profit for that. But I think that Zillow is a good short position. I think that housing demand is really dying off with the higher interest rates. People just can't afford a mortgage right now. So Zillow is a good position to take on. They have a crap ton of debt in their latest earnings report. If you go to their cash balance, super low. Zillow earnings, let's see, Zillow investor relations. I think they only have like 2 years worth of cash on hand. So if the Fed, pivots immediately, then that could end up bailing them out. But if the Fed keeps their promise to keep interest rates higher for longer, then Zillow is going to go under. Let's see. Financials, SEC filings. We want to look for the 10K or the 10Q. There she is. All right. You want to look at the cash flow statement? It's the most important thing to look for if you're looking for a company that's going bankrupt. If I can find the damn thing. Let's see. Not seeing the cash flow statement in here. That's unfortunate. Operating loss, though, was oh, there we go. Consolidated statement of cash flow. Operating loss was $101 million. The current cash balance that they have on hand is $1.4 billion. But they had $2.8 billion at the beginning of, I'm assuming this is the year. Yeah, $2.8 billion at the beginning of the year. $1.4 billion at the end of the year. So basically they cut their cash position in half. Most of this ended up coming from, let's see, investing activities were purchases of investments. So if they stop investing into shit, then they would probably end up saving money. But I guess that case, the net loss really isn't that much, so they could survive. But I don't know, if they keep investing like they have been, that would definitely be shitty for their stock. New to stocks but learning, why can't I trade for today's trades? You have to enable 0 data expiration options. That would be under your user settings. So if you go to your settings, there's something in there where it lets you trade same day expirations. I forget exactly what the... I think you go to settings, investing, option settings, and then trade on expiration date. Can't you short small caps since a lot of them will fail? Yeah, the liquidity would be low just because there's not a lot of shares available for them. But, you know, a lot of people have been shorting small caps for the last 2 years and made a shit ton of money on them. So you can still do it. How do we short sell? Yeah, let's see. All right. VIX is back above 27. SPY's at 386 again. I'm kind of tempted to take out my short for the 385, 386 strike price. Since I still have that April 21st option, that might not be a terrible idea. These are going for 14 cents, 13 cents a piece now. Actually, KRE is making a move to the upside. It was down 5% this morning, and now it's only down 2.5%. And these are going for 12 cents. I might be able to get them out at 14. Just don't want this to start going against me. Let's see, 32, 14, 18 times 5. That would be 90 profit. Let's see. Did that order go through? All right. I'll try to get them out at 14 apiece. Nope. No fill for 70. Well, just gonna keep having to hold this one, I guess. Uvixi is making the comeback right now. It's into the account up a little bit. What's your thoughts on the market for the Fed meeting on the 22nd? I think that it's going to be a bloodbath. I think that the Fed is probably going to go with the 25 basis points. It's a nice medium ground. And then the summary of economic projections and the Fed dot plot, I think, is going to be a lot higher than where the markets expect. If you look at the end of the year, the estimate from the Fed futures is 3.5 to 3.75%. And the last time that the Fed did their dot plot, they were estimating 5% interest rates. So I think that they're probably going to hold that. I think they're going to at least hold the 5.0 to 5.25, if not go a little bit higher, just because inflation is still at 6%. So I think they're going to come in a lot more hawkish than what the markets expect. And you would see probably a good, I would say at least a 4% sell-off, if that's the case, if they go against the Fed futures. And then if they do the 50 basis points, which is unlikely, but if they did do the 50 basis points, that would probably be like a 5-6% sell-off. How do we buy VIX? Yeah, you could buy VXX. You could buy UVXY. There's a few other options. You could just buy options on the VIX depending on what broker you have. I know that with Robinhood you can't do it, but with Aries you can type in VIX here, VIX, X, this one, and then trade options for this. So you could set your expiration date for whatever you want. So if I wanted, say, April expiration, I could buy like a $30 call, which is going for $275. So I just need the VIX to be above $32.75 and I would break even. Or I could do, regular spread options. Just buy this one, sell the next $30 call. Just assuming SPY is going to be above 30. I'm only paying 20 cents for a $1 spread, so I could, 5x my trade if this ends up being correct, where the VIX is above 30 on April 19th. So some brokers will allow you to trade options for the VIX. Robinhood, unfortunately, doesn't. They don't have a lot of options, but that is one way you could trade it. Honestly, I think I'm just going to switch over to Aries in the next couple of days just because I don't make much day trades anymore like I used to. The zero data expiration options, I've been kind of avoiding those the last week, and it's proven to be pretty good for the profits for me. So I think I might just end up transferring some cash over to there and trading with the Aries account rather than sticking with Robinhood, just because the limited options you get with Robinhood and the bid ask are both a pain. But yeah, everything is just dropping like hell. IWM is almost at a new 52-week low, 162 versus 172 right now. So that one could be breaking the lows. That would be pretty rough, especially since it was trading at 190 just a few weeks ago, or just a week ago. That's brutal. I'm going to put in all the trades that I've been making the last couple of days, though, because I have not updated my spreadsheet in a couple days. So let me go to the drive. KRE is still making a comeback, only down 2% versus 5% this morning. But still holding that position. Still think that there's a good chance that KRE is below 50. So not too worried about it. But let's log all these in. All right, so I closed out of the gold leaps. That was from February. Let's see. I ended up opening that. That's on February 6th. All right, insert one below. 2-6. GLD. Call. Leaps. Whoops. Leaps. This is a bullish position. Expiration is 12/20/2024. I bought the 160 strike price and I spent $31.25. And I ended up closing at $33.25. All right, let's see the other positions. So I had the SPY 390/391 call credit spread. That one I actually took a small loss on. Could have held till today and made the profit for it, but that's all right. Closed this one yesterday, 314, and I ended up closing out. Whoops, don't want to change that. I ended up closing out at 42, so that one was a. I have these the wrong way around, I think. Yeah. Should be next. Should be here. So that one was a $12 loss. FedEx I'm still holding on to. Let's see what else I closed out of. The SPY 379 380s. Put credit spread. I think it's this one. Yeah. Opened 4 at 27. I ended up closing those at 9 for 72 profit. Let's see what else. Yesterday I opened the KRE call credit spreads. So 314 KRE call credit, which is a bearish neutral trade. Expiry is 324. So I still have the Fed meeting that I could hold these into, which I think could be very bearish for KRE, even if I don't make the profits beforehand. And strike prices I chose were 51, 50. 5 of these that I opened at 33 credit. Still haven't closed them, obviously. And then I also opened a SPY put debit spread yesterday. SPY put debit, which is just a bearish trade. Expiry is 331, and I'm assuming it's going to be below 385, 386, 385 strike prices. 6 of these that I opened at 35. And the QQQ call credit spread I closed out of again yesterday, 314. And I ended up closing those at, let's see, I closed those at a loss. And I have that typed in the wrong way too. For 188 loss. FedEx I already have typed in. So I think that's all the trades. And these are the ones that I still have open. FedEx, KRE, SPY put debit spread, and then the shares of eVixie. Let's see, put debit spread bearish, call credit spread as bearish neutral, call debit spread as bullish, call credit spread as bearish neutral. All of these ought to be good. When you buy a put debit spread, you are bullish. No, when you buy a put debit spread, you're bearish. You're assuming that the stock is going to go below the strike prices that you chose. So, for example, with the SPY put debit spread where I chose the 386, 385 strike prices. I'm assuming SPY is going to be below the 385 strike price, so that would be bearish. If this was a put credit spread, where I had the opposite way around, where I sold the 386, bought the 385, in that case, I would be assuming SPY would be above 386, so that would be bullish or neutral. So put credit spread is bullish neutral, put debit spread is bearish, a call credit spread is bearish to neutral, and then a call debit spread is just bullish. Yeah, so that would be a bearish trade for a put debit spread. But yeah, that's all the trades that I got today. Don't think I'll be making any more. Just gonna keep on piling into UVXY $100 a day, like I said earlier this morning. SPY is down 1.5%. I don't think that we're really gonna trade much lower than where we're at right now. I think we're just gonna hang around this 386 level for today. So maybe neutral, but I haven't been trading zero data expiration options, so not really too interested in taking an iron condor, but that might be a decent idea if you're wanting a zero data expiration today. VIX is at 27, so that one's going up, which is good for my UVXY shares. And yeah, that's it. And I will catch y'all tomorrow morning at 9:30. Any good banking ETFs? I wouldn't want to be in banks right now. I would avoid banks currently until there's more clarification that banks aren't going to fail. I think that banks are in a whole lot of trouble, not only because of the recession fears and people doing bank runs, but also because their revenues are going to be coming down because less people are buying homes and cars in a recession, and with the higher interest rates, it's just not a conducive environment for banks right now. So I wouldn't be buying them, but I was also shorting Bank of America for a while. Could have held on to that put option, actually, and that would have been a little bit more profitable. And I got out at 30, and now it's trading at 28, but it is what it is. I got my profits. So that's all I got for y'all today, and I'll catch y'all tomorrow morning. See you, everybody.